Okay, thanks for joining me. This is a crazy journey we're going to go on here. This is going into the microcosm of sub-millisecond algo trading. All right, now this is hard to even capture, but a few people got really taken to the cleaners in the last 1 minute of trading on Amazon. Okay, but first, just to give you a quick background, I'm Uncle Dan, and I'm here to help people understand how these markets work. So today, we're going to talk about how a stop loss order in the last minute of trading can cause a panic drop in a stock. We're going to learn how this happened on Friday, October 16th, by using a tick chart. And tick charts are what? I'll go over this a couple times in the video because this may be complicated, but tick charts are basically, instead of showing us the price range during a certain time frame, it's actually going to be based upon the number of trades. Please leave comments and feedback down below. Let me know if this is clear. If you have questions, I'm going to answer them. If you like it, give it a thumbs up. If you want to try to evolve your trading with me and everyone else in our group, consider subscribing. There's a link down below to our Discord group if you want to join that for a more interactive discussion on the market itself. Let's jump into this. You can see the stock almost hit $3,400 at 10:30 in the morning, but drifted all the way back down to around 32.77 in the last minute of trading. We were 32.80, got down to 32.75 with 1 minute to go. And then this market crashed 120 points and then back up, basically closing at 32.72, which is right here. Up here on the screen, you can see it closed at 32.72. This all happened in the last 9 seconds. But how can we prove what actually happened? We cannot see it in a bar chart unless we had a second by second bar chart, which we don't have. So unfortunately, we don't get to see it. But hang on, what about a tick chart? Now, normally, no one would ever use a tick chart, but let's look at what I found using a tick chart. Now, what I'm going to do is I actually moved to a tick chart with 10 ticks, and look what I find. This is real interesting. We get to see what actually happened in the last 9 seconds. Now let me just tell you something, because I've already gone back and done the research on this. 9 seconds before the market closed, we hit 32.60 right here, okay? So this is 10 tick increments. 10 ticks. What is a tick? A tick is a trade that gets recorded. So this is like time in sales, but it's in graph form, which is easy to consume than looking at the time in sales in the last 9 seconds. So this is amazing. We actually can see visually what happened in the flash of an eye. You can see the volume done per 10 ticks. So the low was 3260.36 in this 10 tick bar, and we can see there was 1,273 shares traded. Now watch what happens. We start to drift down 59, 58, 55, okay? So this happens in increments of 10 ticks. So 100 trades happened, and this all happens in the span of a second, okay? We're looking at sub-second trading. So from here at 32.60 to the close, where it's grayed out, this all happens in 9 seconds. When we say in the last minute bar we traded down to 31.60, with 9 seconds to go, we hit 32.60. So in less than 9 seconds, we dropped 100 points on Amazon stock. We bounced back up 110 points. 110 points in less than 1 second. So these are sub-second trades. 10 trades each. So I hope that helps you understand where my line is. Was 9 seconds to the close. So all of this happened from here to here in less than 9 seconds. So let's look at what's happening here. Now down here is the volumes. Okay, now this is perfect. So now we can actually see the volume because the scaling has changed, and it's ignoring that last bar where the volume was right on the close. So now we can see where the volume picks up as we're dropping and going all the way down to 3160. Very cool, man. So now let's look and see where the volume really came in. So look here, 6,700 shares traded around 32.45. So at that point, it was down about $15 in that 1 millisecond. And then we really started to plunge. So look how much traded at 31.90 to 3,200. So we're down $60 in here. And we're trading thousands of shares. Okay. So all down in here, if we want to draw the line and say, okay, what happened below 3,200? All this volume in here. So everyone's about a few thousand. So if you look across here, you're probably looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 30, 31, 32. So we have about 32 bars below 3,200, averaging at least 1,000. So we're looking at least 30,000 shares traded below 3,200. All right, so these 30,000 shares, $60 lower, all the way down to 100 points lower. So we're looking at millions of dollars here, right? This is millions of dollars. And then what we see here is that in the last sub-second, we had crazy swings in here from 31.80 up to 32.30. This is all sub-second trading activity. And there's thousands of shares trading. And then here, we traded as high as 32.58, as low as 31.68, so a 100-point swing in a sub-second 10-tick trading range. And then the last sub-second trade between 31.60 and 31.64, 436 shares traded down here. So this is a huge, massive swing. So you can see all the volume in there. So there was real trading happening down in here in these sub-second increments. Now I'm going to move over one, and you're not going to see the volume anymore, because that last trade, right as we closed, was actually all the way back up. Just a huge pop back up, and then closed at 32.72. So the market actually settled at the high right here. At the high of this bar was the settled price of the stock. Right? So this was the closing price of the stock right there. Okay, so this is insane move. Millions of dollars were made and lost in these sub-second trading bars. Okay, so just to repeat, from where my line is right here, we were 9 seconds to the close. And then this is where we broke 32.60. There was some stop loss orders in the market that got triggered right here at 32.60, where their stop loss got hit right here with 9 seconds to go. And his stop loss order really precipitated a crazy 9-second move right here. All right, so this move was partially caused by stop loss market orders in Amazon call options being triggered, and market makers scrambling to try to hedge the calls that they were buying. Now, obviously, this is not from just one order, but who's to say which order triggered all the other orders? But clearly, there were some market orders triggered in the last 9 seconds, which caused a massive plunge where the market makers were trying to hedge the options that they were taking on, and there were just no buyers. So we saw a significant move down. Now, to me, it looks like there's at least 30,000 shares that traded down in there. And then in the very last tick trade, 320,000 traded right on the close. For that, there were stop loss orders getting hit. You see all the volume in here? 1,000, 1,000, 1,000, 1,000, 1,000. You can see there's just no bids. 1,000, 1,000, 2,000. Down here, only 400. So basically, there are market orders being filled by algos, and there's simply no bids. And then in the very last sub-second on the close itself, there's more volume than the whole 9 seconds combined. Market maker algos trying to hedge those calls by selling shares, and there were simply no bids. This caused a precipitous decline by over 100 points. The option market caused this to happen. Finally found a reason to use a tick chart. It's allowing us to see sub-second trading in visual form. This is very similar to a time in sales, but by bundling 10 trades at a time, we actually end up with something that's visual that we can digest. So this is really cool. And then I'll just move over a little bit. You can see where it then traded afterwards. You see after the options had closed and the options are no longer trading, you then saw a more normal market after the close. So this all was precipitated by market orders being triggered in the option market.